Mm. Oh, yeah. Oh, sorry. I think my suspenders are twisted. Oh, that's much better. Oh, hello, entrepreneurs. Joe DeChara coming to you live from downtown Flushing, New York for another amazing episode of How to Win at Business. And you would think that after all this time, I know to lower my phone, but it might be an important message. So I'm going to lower it anyway. There we go. And tonight, folks, if you're watching live, give me a hashtag live. If you're watching a replay, give me a hashtag replay. And if you're not watching, it's sorry. It doesn't matter to me, really, because I'm only doing this for the people that are watching, if that makes sense. And I need some good tea. I'm pretty upset because what I saw today, and I'm going to share it with you, is, I've been actually reading news now about taxes, and I don't like what I'm saying here, because let's go back to this one first. Okay. In The Art of War, which I don't know too much about, but I have a friend, Sherilyn Chu, who explains it to me. And one of the rules is to know your opponent. One of the rules is to know your opponent. And if you don't know what the art of war is, look it up. It's a philosophy that a lot of organizations use. So basically, know your opponent. And for small businesses and anyone paying taxes, the opponent is the IRS, because we all have to file taxes. Even people that don't have to file don't know if they have to file or not. And sometimes they have to file and they don't, because they just don't know, if that makes sense. But let's look at the IRS structure. If they're our opponent, who are they? And what do they want from us? So let me make this a little bigger. So you could see there's actually 4 primary divisions of the IRS: wages, large businesses, small businesses / self-employed, and tax exempt. So tax exempt get a lot of scrutiny because there's a lot of fraud. That being said, I don't focus on a lot of not-for-profit issues, not when it comes to the IRS right now. But I do focus, my clients are all small business owners. Now, look at the self-employed. What exactly does that mean, self-employed? What's the difference between self-employed and small business? Well, the difference is the self-employed means you're a sole proprietor. You're filing a Schedule C with your personal return. So that's the first issue. The second, well, the real problem with that is the IRS focuses. Oh, let me go to the next slide, folks. Okay. So their strategic focus. So there's 4 divisions, and all of their strategic focus are the same. The underreporting tax gap, underpayment, and non-filing. Underreporting means you're not reporting all of your income, or you're overstating your expenses. Underpayment means you reported income and you owe taxes, but you're not paying. And non-filing is the probably tens of millions of people that don't file because, like I said, either they don't know they're supposed to, or they just, whatever, reason is they're not filing. So that's our opponent. And so I'm not going to talk about what the strategy is, but here's what we're up against. The number that they're coming up with is $7 trillion over the next decade. That's the tax gap. Let's go back over here. Underreporting, tax gap, tax gap, tax gap. That's what we're talking about. He's giving a reason, and his recommendation is this. They want to help bulk up the IRS, whose mission is to collect money from us. And when I say us, I mean self-employed and small business owners. You see, small business owners have corporations. That's the difference. So if you are a sole proprietor, you are at a great disadvantage. And I suggest you go to my YouTube channel. I have a lot of training on that, a lot of videos on that. And so let's look at what's up ahead. They want to fill they want that $7 trillion. So how are they going to get it? Look at this. Over the next coming decade, 15% of, okay, so they're giving us, so what they're saying is 15% of all taxes are not collected for whatever reason. Well, okay, their solution to these problems is to hire more auditors. Look at this. The White House proposed a stream of 80 billion over the next decade. That's 8 billion a year. To upgrade IRS technology. What they're not saying is what does that mean? They're gonna be using more technology, folks, to track us down, to see what we're doing, our bank accounts, our withdrawals, our deposits, our credit card, our Venmo, PayPal. They have it all. And they know where we're going. They know where you're traveling to. So if you get called to the carpet, you're going to have to prove. You're going to have to document what you've been doing. And most of the focus is on sole proprietors. Now let me do this. I'm going to take this off. And now we get to the real crux of the problem, because there's over 25 million sole proprietors out there that are operating above the radar. You're not flying under the radar. The IRS and a lot of other state, local, and federal government agencies are interested in you. That's the bottom line. And this is why, because sole proprietors are usually sole proprietors because they don't have somebody like me that knows that being an S-corp, where's my book? I have an S-corp book, and you can go on Amazon right now and check it out if you want. But everything, the amazing itty bitty book on S-corps. And you'll find out why the government doesn't want you to be an S-corp. And that's my story. I'm sticking with it. So if you're a sole proprietor, and even if you're not a sole proprietor, even if you have a corporation or an LLC and you want to pay less taxes and find more money, I suggest you hit my webinar, my workshop coming up on June 25th. I put the link in the chat. And also, every Saturday we have Mastermind with Joe DiChiara. And you can always connect with me by going to timewithjoe.com. And that's my story, folks. It's 7 o'clock and it's still really light out. I guess it's light out. God bless. I will see you again soon and connect with me. I love talking about business. Thank you. Over and out.